G'day guys, welcome back to Mango Invest. In this video we're going to catch you up on all the 2 months worth of dividends that you guys haven't seen. It's been a while since I've posted a video. But again, we're just going to give you some more updates on the portfolio. Alibaba's been doing really well, Tesla's been doing really well, and in turn we're now up by $8,000 worth of profit in the portfolio with a total equity of $631,000. Although, you know, this morning we heard about the Trump trade wars with China. You know, they're reinitiating it. There's a lot of bad news, and therefore, just in the one day, we're down by, you know, $19,000 in Australian currency. You know, in the pre-market, we're now down a further $2,921 dollars. That's still lost. That's going to change as we go. But if you've been watching the portfolio, you know, for over a year or even the last couple of months, you know, I was negative over $30,000, okay? And then so recently, within the last couple of months, it's absolutely just shot up thanks to Alibaba and Tesla. And a few other companies, they've been doing really well, which is good. In the cash position that we have here, we've got $359 in the Australian side. We've got just over $1,000 in the US side, just a little bit of cash just sitting there. But we'll have a little bit of a deeper dive into the actual companies. We'll have a look at Alibaba. And then overall, so the total equity that we've got now is you know, $47,000. We're up by $8,500, which is good. You know, I remember when I was negative like $20,000. If we take the pre-market off, just in the one day, we're negative $4,300 just in that one trading session. You know, but overall, if we will have a look at the 5-year period, you know, we are starting to see a little bit more of an uptrend. It was just that most recent downturn within the last trading area. So they are tracking well. They were doing pretty good, but just that recent news with you know, Trump and the tariffs and whatever, the market hasn't reacted well to that. So we've just seen that recent downturn there. Let's head back to Tesla all the way down the bottom. You know, we're now up by, you know, just under, you know, $15,000 with Tesla. So they've been doing pretty well over the course. So in the last, you know, year, like back in April this year, we were looking at, you know, $227 per share, and we're now up to $413 per share. So that's absolutely skyrocketed. You know, so hopefully that sort of continues to track well, because that's contributing to most of the profit within the portfolio. But the holdings remain the same. If you've been watching me for a while, I still hold, you know, most of the dividend companies that we all like, SCHD, Realty Income Corporation, JEPQ, and a few others. They're remaining fairly steady. With the yield max ETFs like Coney and MRNY, I've been getting obliterated by these. They're still paying me some fairly solid dividends. However, we're negative, you know, $8,000 on one, $9,000 on the next, and then, you know, with you know, Misty negative $6,000 there. So not doing too well with the yield max, although they are paying me some pretty good dividends, in which we'll get to that very shortly. We'll just have a look at the overview. Okay, so this is where it sort of starts to break up the Australian side with the US side. So again, this is the total equity overall, but within that, the Australian side equates to 1.76% of the total portfolio, and that's over $11,000. And then with the Wall Street, that equates to most of it being 97% of the total money within the portfolio, and that's $623,000. And then we've obviously got the cash respective of both markets there. All right, but let's have a look at all the dividends first, and then we'll have a look at some of the other, like deposits and withdrawals and all that sort of stuff. We'll click the US side. We'll click the filter. We just want to see the dividends, and we'll click the date range here. We'll just have a look at August. We need to catch up on August. All right, cool. So while I have a sip of my coffee, just have a look at all the different companies that have been paying the dividends just over to the right-hand side. Now, again, not a very good month of dividends. Okay, so fairly low. We'll get to the totals very shortly. But very low, very inconsistent. The yield max ETFs have been a bit of a letdown as they decrease in value. The dividends get a lot lower. For some reason, they haven't been paying as well as what they have in the past. But again, like that's the risk you're going to take when you take on these, yield max ETFs. They're not going to be consistent. You're going to get your higher months, you're going to get your lower months. So I think we're just going through a bit of a bad time at the moment. Once the stock price rises in value, they start to get a little bit more, cash flow. They're going to redistribute more money in the form of dividends. So we're just going to have to wait and see for the rest of, or to the end of this year and the start of next year. All right, let's click the date range and see how September is looking. Go the 1st to the 30th. Okay, and this is a little bit better. As you can see, Misty paid me $459. JetQ, 555. That's not too bad. AGNC, this real estate investment trust, this has actually been probably the most consistent company in terms of dividends. So $709 this time. Coney paid me a little bit more, being $788, although it's really not good enough. I remember when Coney was paying me over $2,000 worth of dividends just in the 1 month, which is pretty crazy. And we've essentially just chopped that in half, which is not the greatest thing to see when you're a dividend investor, right? NSCHD just being fairly consistent. They'll pay every quarter, 466. Not too bad there. But that's enough of our dividends. Let's have a look at some of the buys that we've been doing. Okay, so most recently, the 2nd of August was the most recent purchase that we did. So as you can see, I haven't really been buying a lot. And the reason for that is I've been saving up all the dividends and, all the money within my, personal banking account throughout my job or whatever. And that's been going towards a house that I've recently purchased as well. So let's have a look at some of the deposits. Okay, you can see that we haven't really deposited anything. Transfers, all right, no transfers. Withdrawals. So withdrawals, this is going to be a pretty big one. On the 24th of June, we did a massive withdrawal of $16,000. $30,000 on the 30th of July, a further $3,000. 20th of August, a further $5,000, and then recently, 3 days ago, we've made another withdrawal of $5,000 USD. And the simple reason for that is we've recently just purchased a home. We wanted to do some bathroom renovations, and that renovation bill came up to about $30,000 in Australian currency. So, we wanted the bathroom. I don't actually mind too much. It just means that, I can't exactly, purchase more shares than what I want to. But also, we wanted to get the bathroom renovation and it's basically free money. I'm getting the dividends from the dividend paying companies here, and it's really taking, no money out of my personal account. I'm just using the dividends to pay off a bathroom renovation in what we want. So that's pretty good, like a free renovation with a house. It's not too bad, but that's what's happening with the portfolio. So you won't necessarily see, some more shares being purchased, or you won't really see too much of an increase in the cash position, because we're trying to get some other stuff sorted as well. We've bought some more tickets to go see the F1 racing next year as well. So that's a long holiday that we're gonna take next year as well. But once this cash position reaches, up to $5,000 to $6,000 again, I'll probably make another withdrawal to pay off the extra amount of the bathroom renovation and maybe like another holiday or something like that. So that's probably the only thing really stopping this portfolio to getting to $1 million within the next, 3 years or so, because we've got, other things on our mind that we want to pay for. But that's the portfolio in a nutshell. We'll go to the dividend spreadsheet here, and we'll just see how we're looking for the dividends. Now, as you can see, the last two bars here simulate the last 2 months. So in August, that totaled 3,422, which is a very low month in comparison. And then in September, not too bad, but we got $4,423 there. I mean, so in the most recent months, that's pretty low. Although when you look back on September of last year, let's have a look there. We ended up getting only just over $1,000. And if we were to look to August of last year, just under $2,000. So, we've pretty much we've still doubled and tripled what we need to or what we have from last year, which is a plus, but it's just not, that large in comparison to the most recent sort of months within this year. So that's actually not too bad at all. So the dividend portfolio is tracking well. The only thing that's really, I suppose, being a nuisance to the portfolio is the dividend or the yield max ETFs such as Coney and MRNY and Misty and things like that. They're just being very inconsistent at this stage. But some of the dividends that are coming out or for this month, you'll see that now, just so we can start to prepare on how much money we're going to get for next month. What's today? The 11th. Okay, so we've got MRNY paying $356 very shortly. Realty Income Corporation, we're paying $174. Coney, this is all sort of projected. We don't know if we're going to get 1,462. It's probably going to be a lot less, probably around that $800 mark. Misty, it's probably going to be around that $400 mark. Okay, so these are all just projected. Okay, but in the month of October, we're projecting to get 4,778 roughly. November, a little bit more of 5,000, and then in December, we're looking to get just over 5,500 there. Let's have a look at the diversification within the portfolio here. So overall, JEPQ hold most of the weighting of 17.5%, coming down to AGNC of 14.5%. QOLD comes up next with 14.3%. SCHD of 11.7%, and then Alibaba came all the way from the back, all the way, to fifth within the portfolio of 11.7%, just because that the most recent uptrend, and I'm really hoping it continues to skyrocket, because very shortly we could see that up into the number one position. But that concludes the video, guys. Thanks for watching. It was good to catch you up on the last 2 months worth of dividends and the updates on the portfolio. If you've got any questions, please leave me a comment, subscribe to the channel and give me a thumbs up. That'd be really appreciated. And I'll catch you in the next one.